Hello and welcome to The Bottom Line here on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. Falling oil prices have been impacting the Russian budget deficit, and quite significantly. Russian energy companies are facing a drop in profits of around 50%, and it looks like Western sanctions are contributing to the impact. But this morning we woke up to Israel attacking Iran, and that has changed the situation for Russia. Let's go to Jan Kennedy's feature to find out more.
Global oil prices saw their largest daily increase in years, following the escalation between Israel and Iran. On Friday alone, the price of Brent crude rose by some 5%, hitting $70 per barrel, the highest it has been since early April.
Iran has a possibility to do one thing, to block the Hormuz Strait, which is responsible for even about 40% of global transit of oil. And that will be the problem for the whole world.
US President Donald Trump wasn't pleased about the recent increase and turned to his energy secretary for answers.
But I don't like it. The oil prices have gone up just a little bit over the last few days. I was going to call and it just really starts screaming at you. Are we okay? Nothing wrong, right? It's going to keep going down a little bit, right?
Russian President Vladimir Putin, on the other hand, has reasons to celebrate. The recent oil price rebound follows months of low oil prices, which had put a strain on Russia's finances.
We anticipated oil prices to come down, but not this sharp and not to this level as of course, April, May 2025. But it's bad for the government budget because they're selling oil at a lower price and they're getting less proceeds in local currency in the domestic market.
According to calculations by KRIA, a Finnish think tank, Russia's revenues from energy sales have fallen from over 1 billion euros per day in early 2022 to about 600 million in recent months. Gazprom and several other Russian energy giants saw a slump in sales, chipping away at the Kremlin's energy revenues. And with revenues falling nearly $23 billion short of expectations, the Kremlin was forced to amend this year's budget. And this decline may continue, with the European Commission pushing to target Russia's energy revenues yet again by lowering the so-called oil price cap, or the maximum price at which the Kremlin can sell its oil.
We also propose to lower the oil price cap from $60 to $45 per barrel. Since the oil cap was introduced in 2023, oil prices have gone down. They now trade very close to the cap level. By lowering the cap, we adapt it to changed market conditions and restore its effectiveness.
Most G7 members agree and are set to discuss further action during next week's summit. Yet analysts don't foresee an escalation that would push prices up high enough to undermine the enforcement of the price cap.
I believe it will be not that destructible for the oil market as it could be, because Iran will probably not do the most risky thing for the whole world, which is, as I said, the block of Hormuz Strait.
Still, like with all geopolitical flare-ups, the situation remains unpredictable.
The West continues to seek every avenue possible to pressure Russia to end the war in Ukraine. So far, the prospect of peace seems far off. The EU has proposed a new 18th package of sanctions, which may slowly do the trick. Today, we want to explore the impact of the falling oil prices and the increasing Russian budget deficit, and what might this bring to in the near future on top of the brewing Middle East crisis. To help us unpack the details, we are joined by Sergey Vakulenko, Senior Fellow at the Carnegie Russia Eurasia Center. Hello, and thank you very much for joining us.
Good afternoon.
So just yesterday, we were still looking at a situation where Russia was facing the lowest oil prices since the pandemic, impacting the country's economy, pushing the budget deficit. But with Israel attacking Iran this morning, oil prices and Russian stocks are rising. Is Russia going to get a break, or more than that, even a U-turn? Can you give us your comments on that?
Well, indeed, oil prices were going down, surprisingly, after OPEC announced a number of quota cuts, meaning, increase in production. At some point, oil prices starting to climb. even before these attacks on Iran. But then again, surprisingly, in the early hours this morning, after the announcement of attacks, the prices jumped up by about 10%, but since then, during the day, they're sliding down. They're still above $70 a barrel, quite higher than they were a few weeks ago, but subsided a little bit.
I wanted to ask about Russia's budget amendment. How does it change the fiscal situation of the country? Russia's projected budget deficit for the year has tripled. In 2025, it is expected to reach 3.8 trillion rubles, an equivalent of $48 billion US.
Part of the reason why it happened is indeed shrinking oil revenues. In the 5 months of this year, they went down in dollar or euro terms by about 10%. In ruble terms, they went down much more, by something like 15-17%. And the reason for that was that ruble was exceptionally strong, both for these prices of oil and for the wartime conditions. The reason for that is a very harsh policy of Central Bank of Russia, which encourages carry trade, that Russian economic agents were repatriating some of their funds from abroad, surprisingly, into Russia because the interest rates in Russia were above 20%. And this worked and the currency strengthened, but because income of the country is in hard currency, converted into rubles, this led that reducing state income. The state receives roughly 50% of state revenues, state oil revenues. The response was that they've just said, well, there will be a higher budget deficit. They were not going to cut any expenditures yet.
Just going back to earlier in the week and looking at numbers, how does this increased deficit impact Russia's capacity to carry on with its full-scale invasion of Ukraine? Does this current situation perhaps lead us to a scenario where it might coax Russia into negotiating peace finally?
So far, Russia definitely is not cutting its military expenditures. And frankly speaking, capacity of Russian economy to sustain the current level of military expenditure, and that's roughly 7% of GDP, is quite high. If the government would be forced to do tightening, it would probably start to tighten other sectors of the economy, reduce other expenditures, but leave military expenditures intact. So I wouldn't count on that.
So defense will be last. With global oil prices falling, Russian energy companies are also facing a nearly 50% loss of profits in the first quarter of 2025 when we compare this to the year prior. What comes next for these companies?
Again, nothing unusual. Their revenues went down by about 10%. Their costs stayed pretty much the same as a year ago. But again, this happened in the past. Russian oil companies are quite trained by the events of 2009, 2014, 2020 to cope with the slumps in revenues. What they usually do, they work harder with their contractors. They try to squeeze rebates, reconsider their drilling programs and so on. But that's business as usual for them. And that was to some extent expected because this expansion of OPEC production was foreseen. What's an interesting item to observe is whether Russia would be able to make use of its increased quotas, whether Russian oil companies would be able to expand their production. But so far, their resilience is there. So it's not a worrying situation for the companies yet. That's the storm they were preparing, and they're batting their hedges.
Going to the G7 summit that is happening this Sunday, do you think that the G7 countries will implement a lowered price cap on Russian oil? And what do you think that the consequence will be for Russian financial standing?
I think the chances that they will lower the price cap are quite high. when price cap was introduced, they were planning to adjust price cap levels every 2 months or so, which would be reasonable. But price cap wasn't particularly effective at the previous level. So when oil price was at 90 and price cap at 60, it didn't really work. Now, of course, well, until very recently, until global oil price was around 60 and the price for Russian oil net backed to Russian seaports, which matters for the price caps, was seriously below 60, around 50, price cap was a travesty, right? So Russian oil exporters could hire any Western ship and so on, and would be in full compliance with the price cap, just selling their oil at market levels. So this adjustment is just a recognition of the prices that were before. But as it was ineffective, as it was violated, evaded, worked around at previous levels, probably the same thing would happen right now too. And frankly speaking, putting additional oil vessels in EU list of sanctioned ships is not going to change much either. EU doesn't have the secondary sanctions mechanism, doesn't have the US mechanism of long reach of US law. So it's not going to punish any Indian or Chinese ports for accepting oil from these tankers. And it has been long ago since these tankers were allowed to stop in European ports for getting their fuel or other supplies and so on. So it's not going to change anything in the way they navigate around Europe. They were banned a long time ago.
So the price cap mechanism essentially doesn't have much impact?
No, not really. Well, that was something that had to be done to keep it current, but it's not going to be more.
I wanted to go back to the events of this morning with Israel attacking Iran. This has changed Russia's perspective to some extent. We see that oil prices have gone up, and this benefits the Russian situation. Can you just explain that dynamic to our viewers, please?
As there are concerns about oil supplies from the Persian Gulf, that they might be disrupted by this current stream of events, global oil prices are going up and call on Russian oil might go higher. So there's brighten prospects for Russian oil, both in terms of price and in terms of willing of other countries accepting Russian oil, contracting deliveries of Russian oil for the next month, for example, because there is more certainty for Russian oil to arrive to the buyers than for oil from Gulf states. Because if there is an escalation, if there is some difficulties navigating by Strait of Hormuz, if, for example, there are news that Iranian port of Bushehr might be attacked and might be fire in there, so there is a bit more certainty, less volatility about Russian oil supplies, and that's beneficial, despite the difficulties linked to buying Russian sanctioned oil.
And now just to recap, we have had oil prices that have been falling. OPEC plus countries have agreed to increase production. So a further price slump on the cards. G7 have updated, whether they will update the price cap is a big unknown. And now there is a full-blown crisis in the Middle East. Can you just give us perhaps a little bit of an overview of what you might think might come in the next few weeks?
Well, predicting oil prices is a very unthankful business, but there are speculations now that there might be some understanding when OPEC was discussing this relaxation of quotas. They might get a whiff that something might happen to Iran, so they might preemptively start increasing their production. Speculation, of course, but plausible. Surprisingly, when OPEC has been widely expanding its quotas, the market reaction was actually rather subdued, surprising to many observers. Part of it was that many were not sure how much spare capacity many OPEC countries, this coalition of voluntary reductionists really had, because capital expenditure in many of these countries was quite reduced. So they might be drilling less than needed to reach back to the ceilings they had. So I'm not going to give a hard forecast here. So any movement is possible. Probably the price drops would be less than people might think a few months ago.
I just wanted to go back to Russia for a moment, because we mustn't overlook the living crisis that Russians have been experiencing for a long time now. We heard that the Borscht Index is at an all-time high. How has the Russians' living condition deteriorated even more in recent months? And is there a possibility that perhaps inflation figures don't necessarily tell the whole story when it comes to Russians' living condition?
Well, the borscht basket has been heavily influenced by a rampant price increase in few vegetables, most importantly potatoes. And there was a number of things that influenced that. And Belarus is even more impacted with that. But that's a relatively narrow basket. In general, inflation in Russia was going on. So this very harsh policy of the central bank worked. Strengthening of the ruble made the inflation on the imported items lower. So actually, inflation has been subsiding. And when Ursula von der Leyen was reciting condition of Russian economy and cited the inflation in there, she was actually wrong. But and in general, there was a great reallocation of wealth in Russia. So the westernized Moscow, St. Petersburg, people working in the banks and so on, had their conditions worsened. But the regions, the people working in Rust Belt towns, working in all these military industrial complexes and so on, they have their level of living genuinely improved.
Very interesting.
So it's not showing up yet.
Okay, you'll have to keep us updated. And on July 1st, EU fertilizer tariffs are going to kick in. This is yet another attempt from Europe to move away from Russia and its sidekick behind. But the question today that I wanted to ask is what kind of impact that might actually have on Russian and Belarusian chemical industries. Is it actually going to impact their economies in any significant way?
We're talking about nitrogenous fertilizer here, and well, I understand why the decision is taken, because the nitrogen fertilizer is mostly made from methane. So if you want to stop importing natural gas from Russia, a product that's a very simple conversion from natural gas should be in part of that as well. However, about a quarter of Europe's nitrogen fertilizer comes from Russia and Belarus. For these countries, European market is about 10% on what they export. Major markets are US, Brazil, and like. So the impact would be not very proportionate. And fertilizer is like other fungible commodities. It just means that these products travel to wide distances in the world. There are not particular oversupply of these fertilizer worldwide. So this effectively means that Europe sources its fertilizer from elsewhere, most likely Gulf countries, and Russia and Belarus substitute those suppliers to the markets that were emptied a little bit by European demand. And the total number we're talking about is about $1.5 billion per annum. So it's quite small. The energy revenues that we were talking earlier are about $10 billion per month.
Okay.
So it's 2 orders of magnitude difference.
Understood. Okay, and just as we wrap up very briefly, what is the bottom line when it comes to oil? So even if its price is lowered, will Russia still manage rather well?
At the levels we are looking at the moment. So if they stay, if you're talking Brent, $60, even $50 a barrel, there will still be enough for Russia to maintain its war effort without any serious disruption to the affluence and level of quality of living of the general population. To make a serious impact on Russian economy, oil would have to go substantially down to $45 a barrel or even lower. But even if that would happen, this would mean a palpable hardship for population, but still enough money for the war.
Okay, Sergey Vakulenko, Senior Fellow at the Carnegie Russia Eurasia Center. Thanks so much for your insight as ever.
Thank you.
And that concludes the bottom line for this week. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And in the meantime, for your latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.